Hey everyone, welcome back to Corporate Decoder. Today we are diving into a company that sounds like it's trying to build with Lego bricks but facing a financial earthquake. Before we get started, if you enjoy getting the real story behind the headlines, make sure you subscribe. Also, we have a Discord community linked in the description below where you can chat with other investors. Today we're looking at a report from Safe and Green Holdings. They filed a Form 8K, which is basically an alert about significant events that could affect the company and its investors. In this case, it is about getting a warning that the company's stock might be removed from the Nasdaq stock exchange. This is a big deal. So what's the problem? Nasdaq, which is a major stock exchange, is threatening to take Safe and Green off the list. They're concerned about something the company did involving the sale of shares, which might have significantly hurt the value of existing shareholders' investments. In simple words, they might have sold too many shares too cheaply, making the shares already owned by investors less valuable. And this happened because of the way they structured some financial deals, especially with something called Series B warrants. Think of warrants as options to buy shares at a later date. In this case, these warrants allowed people to buy shares without putting up any money up front, which raised concerns about how much the existing shareholders might be negatively affected. This isn't the first time Safe and Green has had issues with Nasdaq. This new concern just adds another reason why Nasdaq might decide to delist the company. Being delisted means the company's stock would no longer be traded on Nasdaq, making it harder for investors to buy and sell shares. It could also scare away potential investors. What is Safe and Green planning to do about this? The company says it plans to appeal Nasdaq's decision. This means they're going to try to convince Nasdaq that they should remain listed on the exchange. They also plan to submit a plan to fix the issues that Nasdaq is worried about. Additionally, just in case they fail to stay on Nasdaq, they're also looking at trading on another market called the OTCQB. This is like having a backup plan so investors can still trade their shares even if they get kicked off Nasdaq. The company even admits some of the things that could go wrong. They discuss their ability to successfully fight Nasdaq's decision to remove them and the possibility of trading on the OTCQB market. They even mention the risks in a previous Form S1 that they filed, meaning that problems have been around for a while. The report was signed by Michael McLaren, who is the Chief Executive Officer of Safe and Green Holdings CORP CAB. Now, what does all of this mean for Safe and Green? Overall, Safe and Green is in a tough spot. They're facing the risk of being delisted from Nasdaq, which is a major blow to any publicly traded company. The fact that Nasdaq is concerned about the company's financial deals and potential harm to shareholders is a red flag. The company's plan to appeal the decision and look for other trading options is a good move, but there's no guarantee they'll be successful. The risks they outlined in their previous filings suggest that these problems aren't new. In my opinion, investors should be very cautious about Safe and Green right now. The potential delisting and the concerns raised by Nasdaq could have a negative impact on the stock price. It's important to keep a close eye on how the company responds to these challenges and whether they can convince Nasdaq to give them another chance. Alright, that's our breakdown of Safe and Green's latest filing. What's your take on these challenges and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.